Hello and welcome back. If you're new here, my name is Jessica Abella. I am a tax accountant in the Seattle area. Something that not a lot of people realize. If you trade your services for someone else's, or you get paid in goods instead of cash, the IRS and Washington State still want their cut. Barter and non-cash transactions are taxable just as if they were cash. So let's talk about how this works. The IRS says that the fair market value of goods and services exchanged must be reported as income. It doesn't matter if you never see a dollar bill, if you provided value, it's taxable. As an example, if you are a landscaper and you trade yard work for bookkeeping services, each side must report the fair market value of what you received. If I provide $100 worth of accounting services, your landscaping services were worth $100, we each had $100 worth of income. Granted, providing those accounting services are also a deduction to that landscaper. There are two sides to that transaction, but it does need to be included in revenue. Similarly, if you are an accountant and someone gives you a used computer in exchange for preparing their tax return, we don't do that here, just to put that out there, but that computer's fair market value counts as income to the tax preparer. Even crypto transactions fall under this. Cryptocurrency is treated like cash from a revenue perspective. It's taxable when you receive it in this exchange of goods and services. Crypto is a little bit more complex, and I'm going to go ahead and take the tangent to say that the person who paid for a service with crypto also has a reportable transaction in that they may have gain or loss on that cryptocurrency. As an example for that, again, this is very much a tangent, I apologize, but it's important. Let's say that you bought $10 worth of Bitcoin at some point. And today that Bitcoin is worth $100, and you paid me that $100 of Bitcoin for accounting services. I include that $100 in my business income, pay tax on it to Washington State and to the IRS. But you, as the person who paid with that $100 worth of Bitcoin, also have a reportable transaction. You essentially sold $100 worth of Bitcoin that you paid $10 for. You have $90 worth of presumably long-term capital gain to report on your tax return. Back to bartering transactions though. If you're running a business, this bartering income goes on your Schedule C or your corporate 1120 or 1065, just like cash income. It goes on your Washington Department of Revenue filing, just like any other business income. If you're part of a barter exchange network like BizX, you may even get a Form 1099-B that shows the total. Make sure that if you receive that income is reported, but it's required either way, whether you get a tax document or not. So the key is documentation. Keep track of these dollars, keep track of the fair market value of whatever you receive, keep those records in case the IRS asks. Bartering can be a great way to manage your cash flow. Don't forget that it's taxable. Treat it like cash in your books. If you've done these kinds of transactions in the past but haven't reported them, consider amending those tax returns and getting that revenue in there. Let your tax professional know if you have questions, bring this up with them. Also, let me know down below in the comments if you have questions that I can answer, whether it's about this topic or any other topic. Happy to address those comments below, either in a future video or in the comments. Click like if this was helpful, subscribe if you'd like to be notified of our next video, and I hope you have a fantastic week.